thing what we're trying to understand is how do we get a basic prediction model in order? Basically, how can we understand the trend that will lead to us being able to understand a little bit of how to predict. This is basic stuff, but let's start off with a general premise that, well, suppose we are on Apple and we wanted to look at how Apple has been doing, and as you can see, it's been doing quite well. It's 315.24, and that started. Looks like it has had a fantastic year run. If I were to say year to date, click out there, see how well it did. It started from about 297.54 in January, and it crept right up to 315 in a matter of a few days, right? So in a matter, but if you look at 1 year, last year on this time it was $156.82, and now it's double actually. So we're trying to understand, all right, how well does Apple do, but how well does Apple do compared to the market? Now, one important thing to remember is something called beta. A beta basically tells you how sensitive a certain financial instrument, in this case the stock, is compared to the market, right? And in this case, the beta says it's 1.24, which means that every time the market, which means in this case, let's suppose it's the S&P 500, moves by a point, Apple stock's likely to move by 1.24 points. So it's about a quarter times more sensitive than the market itself, right? So if it moves by 1, Apple moves by 1.24. If it drops by 1, Apple drops by 1.24. So that's the elasticity between S&P 500 and Apple. Fair? So how do we get these numbers? How do we understand? So this is a coefficient. This is the rate at which Apple tends to move whenever the S&P 500 moves. Now it's calculated at a 5-year monthly set, and we're going to run it on a yearly but on a daily basis just to take a look at it. So let's get to it, shall we? So what I have done in this case is let me try and clear out this section so that we can start fresh. So what I've done is I've downloaded data for the last year from 1/17/2019 right up to, so on a Mac, if you wanted to look at the length of the data set, you can simply do Command and press the down arrow. And it tells you we've got 253 days of active trading data starting on the 17th of January 2019 and ending on the 16th of January 2020. So again, if I wanted to go back up again, press Command and up button and it takes me up. That's why if you've got thousands and thousands of lines, you don't have to keep scrolling down to figure out where the end is or where the beginning is. So, having mentioned that, let's now look at how this whole thing works. So the very first column says date. Next one, you see that some of these, the labels are not very legible. So what we'll do is we'll try and clear all of them out. So rather than clicking on each of them separately, so what you could do is click on each of this, see where the cursor turns into a cross right at the edge of the columns. If you double clicked on it, it would clean it, but then you have to do it for this and this. So a quick way is click on that, the side, right where I am. That's sort of highlights the entire spreadsheet, and then just click on any of these sides and it'll open up all of them. So that's a quick and dirty way to tackle it. Now let's look at the data itself. You've got date, you've got what's the price at which Apple closed that day. So it says Apple closed at 155.86 on January the 17th, on February the 12th, it closed at 170.8899, which is 170.89. On the other hand, S&P on that day closed at 2635.96, and on what was it, February 2012, it closed at 2744.73, and all that stuff. And then it tells you about Apple volume. How many shares were traded that day? And it shows a massive amount of shares being traded, about 29,821,200 shares being traded. The S&P volume is even larger than that. What we want to do is we want to start with the basics, understand how these things actually play onto each other. So let's start off. The first thing we'll do is we'll go into, in this case, we'll start off with doing a little bit of basic analysis. Firstly, let's look at, is there a relationship between the price of a share and the volume of trading? Does more trading automatically mean higher prices? Does more trading mean lower prices? What can we garner out of that? So we'll go into data, and which is this button. Once we go to data, it says data analysis, and we'll go into data analysis, and you see all these different data analysis functions open up. And we'll start off by doing a little bit of correlation. Correlation, of course, is basically, is there a relationship? We're not assuming any cause and effect. We're just saying that, are there relationships between different variables? In this case, we've got 4 variables: the close for Apple, the closing price for Apple, the closing price for S&P, the volume for Apple per day, and the volume for S&P per day. And then we click OK, and it says, all right, so what do you want to correlate? We have to choose the data. So we'll go Apple close right up to S&P volume, all 4 of these variables, but I'm not going to pull it all through because I'll try to do a quick trick in order to get it done. So instead of command down, I'll do command on a Mac. Remind it is Mac. On a PC it might be slightly different. It's command shift and down, and you see, voila, what happened was it automatically checked it, all the usable filled in numbers, columns and cells from B1 to E253. So we know that B1 to E253, we've got 252 days of data. We can therefore even say that quickly we can say, oh, there were 252 days of trading in 2019, or between 2019 and or 16th of January, 17th of January 2019 and 16th of January 2020. We can easily say, oh, we had 252 days of trading. So then it says, this is our input range. Once again, I'll do it. I'll do a quick coverage. So we're going back up there. We want to choose the correlation between Apple close, S&P close, Apple volume, S&P volume. So we've just selected the first few, and then we want to do a quick shortcut, command shift and down arrow on a Mac, and it says it's grouped by columns, true, and the labels are in the first row. You have to let Excel know, because or else it has no idea what to do with it. Then the next is, where do you want the results to be shown? So we'll say the output range, let's say we want it on G1. So click on that and click on G1. And then so quick overview, the input range is B1, which is Apple close, S&P close, so Apple close price, and then we also include S&P close price, Apple volume, S&P volume, and we cover all the cells that have values in them, and the output range, make sure that the labels on the first row, and then click OK. And voila, you have something out there. And once again, to make sure that it's all readable, we've got that set. So it shows you something interesting. It says that this is the correlation. It says that Apple's closing price and S&P's closing price has a very high correlation. They seem to move hand in hand, which means that if the market goes up, Apple goes up. If the market goes down, therefore, Apple is also likely to go down. But then it tells you something interesting. It says, let's look at the volume of trading and the closing price for Apple. So it says that Apple's trading volume and Apple's closing price has a negative, very, very low, nonetheless, a negative correlation. This negative correlation basically means that higher volume oftentimes means that prices are going to go down. So if too many people are trading, there might be a few pessimistic traders in the market that come in when the volume goes up, and therefore it tends to push prices down. Now, of course, as a very famous saying goes, a single swallow doth not summer make. In this case, the same issue happens, which is, well, happened with Apple's close and Apple volume, does it also work with S&P? So S&P close to S&P volume, and we see that, yes, it actually seems to make sense. Higher the volume, the more downward pressure you have on the prices. Same thing, you'll see Apple volume to S&P close, S&P volume to Apple close. They have a negative relationship. On the other hand, of course, S&P volume to Apple volume, so if there's a lot of trading going on S&P, it's also likely that a lot of trading is going to go on for the Apple stock, which shows that there is somewhat of a correlation, not as strong as the S&P price and Apple price, but S&P volume and Apple volume has about a 0.5429 relationship, which means that anytime S&P volume goes up by 1, Apple's trading is about half of that. Apple's volume is about half of that. Now, let's try out a nifty technique to look at, because sometimes these columns can be many and you don't want to pass through every single one of them. You want to see like quick highlights as a way to visualize the data. So in order to do that, what we'll do is first we'll select the data we want to look at and we want to visualize, and then we're going to click on something called format, and then onto conditional formatting. And once it shows conditional formatting, we'll say, all right, we want to actually create a rule. And see the plus button out here. These are different rules you can create. So we'll create a rule. What's the rule? Well, let's in this case say that we want to create a data bar. And we want to create a data bar where we are saying that if it is a positive value, show it as a blue. If it's a negative value, show it as a red, right? And that's it. And all we'll do is it'll try and show, but because it's a data bar, if the positive value is high, it'll also show a longer bar. If it's lower or a negative value is high, it'll show a longer bar. If it's a smaller negative value, it'll show a lower bar. So, and we'll say that, all right, let's keep everything the way it is, and okay. And they're saying that, all right, so that you want a data bar, you're applying it to this section of the numbers, and let's click OK. And voila, you see that anything that's negative is already highlighted as red, and anything that's positive is highlighted as blue. But the ones that are white, completely positive, such as big one, it's nearly filled out the entire cell. The ones that are nearly one, they've filled out about 96% of the cell. The ones that are positive but not completely positive, about 54% positive, shown as at 54% of the bar being filled out. So this is conditional formatting. It gives you a quick visual take, a nice way to visualize what you're doing as you're dealing with data, whether you're looking at large data or data to scale or small data, whatever it is.